Hey, what's up, everyone? This is John from Accelerate Wealth, and today we're going to talk about health savings accounts, or HSAs. So, what is an HSA? Well, an HSA is a personal savings account that can be used to fund qualified medical expenses, and it's used in connection with individuals who have high deductible health plans for their health insurance. So, the way insurance works is there's really two components to your health insurance. There's a monthly premium that you have to pay to keep the policy in force. And then there's a deductible that has to be met before the insurance company will step in and make payments on your behalf for your health insurance. So what we're talking about here is a high deductible health plan, which means you have low premiums. Premiums and deductibles are kind of opposite one another. If you have a low premium, you have a high deductible. If you have a high premium, you have a low deductible. And so this particular insurance, a high deductible health plan, is more suited for individuals who are typically not going to the doctor very often. And the reason for that is if you're going to the doctor frequently, you're going to have to meet that deductible before your insurance kicks in, and it's set at a high limit. So it wouldn't make sense to have a high deductible health plan if you're going all the time. So if you're in this high deductible health plan, you can have an HSA. Now, you're often going to hear of HSAs as having a triple tax advantage. And because they do, it's arguably the most powerful savings tool that is available to us as investors. And those three tax advantages are the contributions are made on a pre-tax basis, earnings, so you can invest in HSA and any earnings that are generated are actually tax-free. And then when you take the money out, the withdrawals are tax-free if used on qualified medical expenses. And I'm going to get into each one of those benefits in more detail. So benefit number one, the contributions to an HSA are pre-tax. And what that means is they reduce our taxable income and we get more bang for our buck because they're pre-tax. It results in a dollar-for-dollar reduction of taxable income. So let's look at a couple of practical examples. We put two scenarios here, scenario one and scenario two. In both scenarios, let's start with scenario one. This individual makes $1,000 and they don't contribute to an HSA. So $1,000 of income, taxes, assuming a 25% tax rate, they pay $250 in taxes and they're left with $750 of after-tax income. In scenario two, the person also makes $1,000, but they contribute $250 to their HSA. And what that does is it sets $250 aside in the HSA account, and it also reduces the taxable income from $1,000 down to $750. Now, they still owe taxes at a rate of 25%, but instead of paying 25% of $1,000, they're paying 25% of $750. So they only pay $188 of taxes instead of $250 of taxes. So their after-tax income is $563, but they also have $250 sitting in a separate account in their HSA. So net, they have $813 of assets in scenario two compared to just $750 of assets in scenario one. Benefit number two, HSAs can be invested. An HSA is just like an IRA or a 401k in that the funds that are in that account can be invested into a number of different mutual funds or ETFs. Now, normally in a taxable account, if you made an investment, you had a gain and you sold it, you would owe capital gains tax on the earnings. So let's take an example. Say you invested $100 and made a 10% return. You would have a $10 profit and you would owe taxes on that $10. With an HSA, any earnings on the investment are tax-free. So you have $100, you invest it, you have a 10% gain, you have $10 of earnings, none of that gets taxed. So what happens is the HSA has the ability to compound much faster because we never owe any taxes on our realized earnings. Benefit number 3. Withdrawals from an HSA for qualified medical expenses are tax-free. So what that means is if an individual withdraws money from the HSA to pay for qualified expenses, as you can see over on the left, qualified expenses might include drug prescriptions or doctor's appointments, going to the dentist, buying a wheelchair. There's a whole list on the IRS's website of what a qualified medical expense is. But if we take money from our HSA and use it towards one of those qualified expenses, no taxes are owed on the withdrawal. Additionally, after age 65, proceeds can be withdrawn from the account for any purpose, not just medical purposes. But income tax is owed on that amount. So essentially, it's like an IRA at that point. We didn't pay tax when the money went in. It gets to grow tax deferred. And when we take it out for non-medical purposes, we owe income tax on it. But we have the power of compounding tax-free growth during that time period. Even after 65, we can still use those funds for medical expenses, and it can be withdrawn tax-free. So let's look at a comparison of pre-tax money versus after-tax money. So what this comparison shows is how much money somebody would need to earn to pay for a $250 medical bill. So if someone has an HSA, they only need to earn $250, and they can use that entire amount to pay for the medical expense because no taxes are owed on that amount. Conversely, if you didn't have an HSA, how much would you need to earn? You'd actually have to earn $333 to pay for that $250 expense. And the reason for that is if you earned $333 taxed at 25%, that leaves you with $250 of after-tax income to pay for that same $250 medical bill. Now, it's not hard to see when this is a relatively small bill, $250. If we had a $2,500 bill, you can see how quickly the after-tax impact makes a big difference compared to a pre-tax bill. So you can really start to see how powerful this tool is when looking at all the different benefits. So to recap, any contributions to an HSA are made on a pre-tax basis. Earnings after they've been invested grow tax-free, and withdrawals are also tax-free when they come out for medical expenses. So you have the triple tax advantage. I would highly recommend anyone who is looking at a high deductible health plan that they open up an HSA because it's obviously an incredibly powerful tool. And if you have any questions, shoot me a DM at Accelerate Wealth on Twitter, and I'd be happy to chat with you about it. Have a great day.